Okay, G, let's talk about what we talked about in our previous episode. And we talked about having other indicators on top of the Bollinger Band. So, in our last episode, we talked about the Bollinger Band and what the Bollinger Band is, and the mean, the second deviation high, second deviation low, how that makes sense. And for those who want to see that video, they can go to the link above to see that video. Um, Happy to have you today, and happy to have my nephew here, and we can go over a little bit of technical analysis round two. How do you feel today, Gregory?
I feel pretty good. I learned a lot from that first video. I appreciate the knowledge, and did a little studying on it, and now just ready to move forward and take charge in this option game.
Yeah, the stock option game, we have not gone into a lot of detail about the stock option game, but we are laying the groundwork for picking stocks. And so for you to trade options and really leverage making a lot of capital, you have to have the fundamentals of just picking growth stocks and then leveraging the gains on the direction to make the most out of the trade. So let's without further ado, I want to share my screen, and I really want to go into what we did last week. So, and then go into what I wanted to show you for this week. So last week we talked about the Bollinger Band, second deviation high, the mean, which is the 20-day moving average, and the second deviation low. I'm using a line chart, but you could also, I know last week you were talking about the Bollinger, not the Bollinger Band, the candlestick. So one can easily change it to the candlestick. The website we are using that I'm a big proponent of is barchart.com. And so for those candlestick people, simple, very simple to use, very easy to change as well. But I'm going to use the bar. I'm not going to go into the candlestick thing. I'm more of a line chart guy. But so we talked about this. And again, it's linked previously if you want to see the video on describing this. But what I described previously, G, is that the Bollinger Band is just one indicator for going into a trade. You want at least a second indicator. I use more than two. I actually use three, sometimes four, and that's a lot, but you really want at least a couple of indicators to corroborate your entry point. So let's look at the stock Apple here, and it had a monumental move down this previous week. It was crazy. But you can see from our previous episode, we talked about when a stock hits its second deviation low on the Bollinger Band, that's a good buying signal. We also talked about the 200-day moving average to ensure that the stock stays above the 200-day. So this represents the stock, the line, and I described this in my previous video. But you can see that looking at the stock, it's above here, the 200-day moving average. So that tells us it's a growth stock. Traditionally, over time, it's going to continue to grow. So this is a good buying opportunity, being that is not near the mean line. So then I have a good indicator here on the Bollinger Band saying, hey, buy me. I'm a good buying opportunity right now. I'm a growth stock. I'm above the 200-day moving average. I'm on the Bollinger Band. So because of mean reversion, I should snap back. And you're going to make a lot of money off of me and sell me when I get up here in the future. Okay, so let's make sure that's good. One thing is you can look here. Apple hit the bottom of the Bollinger Band back here, but look, it kept going down on the Bollinger Band. So that's one risk right there, that if you have extreme market conditions like we had this week, then you can, even though you're on the bottom of the Bollinger Band and everything is saying um, buy, 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 it could continue to slide and you can experience some short-term pain as the stock stays on the bottom of the Bollinger Band. So what's another indicator to confirm that, yep, this is a good option? What I like to use, and it's a real simple indicator, is the RSI. And so on bar chart, the previous week, I did not show you how to put this up. And I had some feedback to say, hey, Troy, show me how to put up the Bollinger Band, how to actually go get the particular instrument that you're talking about. So what you do is you go in bar chart, you go to study. And let's say, for instance, if I wanted to get rid of the Bollinger Band, I could easily add it right there, or I could simply get rid of it here. Let me get rid of it here and add it back. So that's the normal chart. You have to use the interactive chart feature, and just to add the Bollinger Band, it's a simple click. Go definitely with the default settings, and you have the Bollinger Band in. So it's really that simple. And John Bollinger, who created the whole Bollinger Band concept, he says go with those features right there that's in the default. Now, let's go with the second indicator. I like the Stochastic RSI indicator. And let me see, RSI Stochastic. It is not adding it, but that's where you go to get it. I'm not sure why it's not adding it. That's strange, but I do have a backup. Let me try it again. Let me go RSI. And yeah, it's not coming up for some reason, but here's my backup. It's here. Let me get rid of some of this stuff. But that's where you go to get it. And I'm going to get rid of this actually. So, and let me get rid of this. Okay. So the wonders of technology. So look here, G. So we went over that, and let me change this from candlestick to bar so that you can see it more simply. So we see that Apple is just right in the bottom of the Bollinger Band. And so I have a buy indicator. My other indicator I use is called the RSI, and this what it does. It shows you the relative strength of the stock and if the market has overbought it or oversold it. And what does that mean? What it means is when you see this color here, and you guys know I'm partially colorblind, this means the stock is overbought, meaning that from a mean reversion standpoint, it's going to sell off. Too many people have bought the stock. And then you can look up here, you can see it's on a 7-second deviation high. And so this is a good indicator to sell or consider selling because the stock is going to sell off. And then look at the top up here as well as the bottom. Look at the RSI. As I move in days, it's selling off. And then here, even though it's on the mean line above, this is the mean for the Bollinger Band, you can see the RSI says that the stock is oversold. So if the stock is oversold, people are now coming in to buy. You understand? So when you see that oversold here, and you're on the second deviation, not the second deviation, the medium, the average 20-day moving average, this says, you know what, it's probably going to bounce off of the 20-day. And so look what it did. The next day, it bounced, it went up some, it went up some, and it's coming out of the oversold. It's coming out, still going up. And then it started to sell off again. RSI is saying, although the stock is going up, the RSI is saying down here, it's beginning to get oversold again. And so, so it started to go down, and then boom, we're oversold again. And look what the stock is. The stock is at the mean, but there continues to be overselling. So as I see Apple on the second deviation lower, the Bollinger Band, the RSI is saying, do not pick it up right now. Oh, excuse me. The RSI is saying that it's still oversold. And as long as this stock stays oversold, the more bullish I am going to become about purchasing it, because for one, it cannot stay oversold. Whatever's oversold eventually gets overbought. So the longer I see this, the more I would say, wow, this is oversold. This is a good buying opportunity. Plus, it's on the second deviation low. So this is my confirmation that Apple is probably a pretty good buy. So that's kind of how this goes. And if you go and look back in the past, let's go look here, where this stock, Apple, hit the second deviation high, and it is oversold. So typically when a stock hit the second deviation high, we come out of it if we're doing a trade. But Apple had relative strength, and it stayed up on the overbought, okay, and the second deviation high up here. And so that was an indicator. Even the next day, when it was on the second deviation high, you see the RSI beginning to come down. And then the next day, it's near the second deviation high, but the RSI is coming down. That's a good indicator that you're not holding above the overbought levels. And so you should probably really not be greedy and get out of the trade. So again, it's a second indicator. One shows you you're too far away from the mean. The other says you're overbought or you're oversold. And what it does, it also uses these two indicators. There's the 0.80, the 80%, and the 20%. So when a stock relative strength goes above 0.80, this shading color appears to show that, you know, too many people are buying this stock, it's going to revert back. And when you go below the 0.2, that's when this shading, this color appears and says that, oh man, you oversold. This stock is sold off too much. It's a good time to buy. So I really wanted to show you that today, G. I wanted to show you the RSI stochastics and how you use that in conjunction with the Bollinger Band as a second indicator so that you can make a proper trade. Questions?
No, not really, but it was basically self-explanatory. When you see when it's in the red, it goes below the 0.2. That's a great time to buy it. As you can see, it's been from February, let's say the 15th, 14th, all the way to now. It's been in the red for a while, so it's giving you. It's going to eventually come up. It's
Yeah,
going to.
this is a super bullish indicator that it's been down there a long time. And you can look at the past. Look how long it's been down in the past on the RSI. Not very long. Where this has just been a stretch of oversold. So this is saying, man, if we here at this point on Monday, ooh, I feel more confident going into the trade. But when it comes to stocks and buying stocks, or options, which is a derivative of just buying the stock. It's all a matter of probability and risk. This gives me a better chance along with that. So, I bought on Friday. I bought, over 30K, just to be honest, because I saw this and I saw that here. And I was like, man, it's going to come back. Now, when I get out, I think I'm going to hold it more for a long-term play, because when you look at Apple, we're looking at a 3-month period here. But if you look over 6 months, the last time we got an opportunity where it stayed down relative to this low for this period of time was September. Around the September frame last year, time frame, from September the 3rd until September the 25th. So a month, it was oversold. So it was a great opportunity. And if you look at the Bollinger Band, where the stock was oversold, showing oversold, but the stock had gotten back to the average, to the 20-day moving average. But then it started to pick up and get overbought for a bit. And you can see Apple has been pretty much trading sideways, but upward, in an upward trajectory. So this big sell-off here is really a good buying opportunity. Let's look at 1 year. When you look at the chart for 1 year, you can see that sideways activity in relations to where it started out in the beginning. You're still up. And then if you look at 2 years, all of this sideways and this dip is a good buying opportunity in comparison to where it was 2 years ago, which is about $43 2 years ago. Now you're at 121. So I feel good that that's a good entry point. And if you just want to look at 5 years, I mean, you can go back 5 years and go back and look where it was around 28, 25, and it's at around 120-ish right now. So again, so that's what the 200-day moving average does for you, is vet out the trajectory. But just looking at a 3-month or a 6-month period, you can see that Apple's been trading pretty sideways. So with a combination of using the Bollinger Band and the RSI, that gives you more probability that this is a good trade to get into Apple, and leave it up to you to decide how much money you want to put out there. So I think that was a good example with Apple. We could use some other stocks, but I just kind of wanted to keep it short and simple today for the viewing audience, for those people who want to consider using the RSI stochastics and bar chart by going to the study. So if you don't have any other questions, we could kind of wrap it up. I would ask that when you look at the Bollinger Band, when you do your setup at home, add this RSI stochastic in the study. You actually search for RSI, and it comes up right here once you search for RSI. But I don't know. Every time I do a taping for this show, I have issues, and that's why I had a backup. But that's where you go to get it. All right. Are you good?
Yeah, I'm good. I would definitely add that to my charts, and I can analyze the entry point much better using that indicator. So I mean, you explained it well, and you can go based off the history in the past. And as you can see back in, like you said, September, it's basically going to do the same thing. You might have to wait a month like it did last time, and it's going to eventually go up. So that entry point is a pretty good way to start.
Yep.
It's being sold.
Absolutely. So, I mean, that's it for us today, G, as far as going over the RSI stochastics. And as always, keep investing. And we call this show Bet Out of Debt, because when you make a trade is call a bet. And hopefully it's a winner one that will keep you out of debt. So until next time, take care.
Yes, sir.